So
David?
Mr. Beard made it
Yeah.
back.
Bill.
Okay, Bill, how you doing there? You have a breakout on Baidu, Scotty. What we're going to do here is for all of the MMTs present, because it's a Fed conference, first one. And we already heard a lot about what Bernanke is saying. Until inflation shows it, it already does to the American consumer and all of that. The way they manufacture these financial instruments are done in such a way that the destruction that occurs from it follows, I would say, the longer that we keep that commodity trade moving higher without making adjustments to the US dollar and also getting the funds Fed rate money overnight, it has to get to a certain percent level. And so there's lots of things that happen in the middle there that can cause what we call severe supply and demand destructions, and re-leveraging assets with too much liquidity. You have to know when to pull the liquidity out of the system in the U.S. economy. And until we do that, the U.S. economy will never have its true recovery. What it will have, as it always has for the last past, let's say 5 decades, but let's start with 3. And as we've always shown how these stimulants create expansion, and they do, but why is it that all of them failed? And on stockmarketpunding.com, on the homepage there, we talk about the history of the Dow there. And you can take a look on that chart, what the whole, from 1970 right up to right around 1982 looked like. There was a 12-year period in there. And it got to a point where the kind of behaviors that we're hearing could potentially go that way in this U.S. recovery. That would choke off the recovery. That means that all those taxpayers' dollars become risk to the consumer U.S. consumer payroll. So what I'm going to do is I'm going to make this a little bit of a series. There's the question, they're asking him questions. So just remember, a bunch of financial reporters, they don't know what they're talking about either. So here, I'm going to play part of the tape for the MMTs and listen to some of the questions. We're looking closely at sustainability of recovery. Remember, this is the very same man that said there was no problem with the housing market before it collapsed. So because of that in itself, we will do our own deciphering of the economic indicators and the economic numbers. Let's listen to what he has to say for a moment.
Inflation and on stable inflation expectations. Once those conditions are violated, or are we moving away from those conditions, that will be the time that we need to begin to tighten. Extended periods suggest that there would be a couple of meetings probably before action, but unfortunately, the reason we use this vaguer terminology is that we don't know with certainty how quickly response will be required, and therefore we will do our best to communicate changes in our view, but that will depend entirely on how the economy evolves.
Mr. Chairman, first, thanks for doing this. This is a tremendous development. There are critics who say that Fed policy has driven down the value of the dollar, and a lower value to the dollar reduces American standard of living. How do you respond to the criticism that essentially Fed policy has reduced American standard of living?
Thanks, Steve. First, I should start by saying that Secretary of the Treasury, of course, is the spokesperson for U.S. policy on the dollar, and Secretary Geithner had some words yesterday. Let me just add to what he said first by saying that the Federal Reserve believes that a strong and stable dollar is both in American interest and in the interest of the global economy. There are many factors that cause the dollar to move up and down over short periods of time, but over the medium term, where our policy is aimed, we're doing two things. First, we are trying to maintain low and stable inflation by our definition of price stability. By maintaining the purchasing value of the dollar, keeping inflation low, that's obviously good for the dollar. The second thing we're trying to accomplish is to get a stronger recovery and to achieve maximum employment. And again, a strong economy growing with attracting foreign capital is going to be good for the dollar. So in our view, if we do what's needed to pursue our dual mandate of price stability and maximum employment, that will also generate fundamentals that will help the dollar in the medium term.
I'm sorry, Mr. Chairman, one can't help but notice that it's been unsuccessful so far.
Well, the dollar fluctuates. One factor, for example, that has caused fluctuations that have been quite extreme during the crisis has been the safe haven effect. So, for example, during the height of the crisis in the fall of 2008, money flowed in to the Treasury market and drove up the value of the dollar quite substantially, reflecting the fact that U.S. Capital markets are the deepest and most liquid in the world. And a lot of what you've seen over the last couple of years is just the unwinding of that as the economy has strengthened and as uncertainty has been reduced. But that's indicative, I think, of the high standing that the dollar still retains in the world. Again, ultimately, the best thing we can do to create strong fundamentals for the dollar in the medium term is to first keep inflation low, which maintains the buying power of the dollar, and second, to create a strong economy.
Chairman, John Hilsenrath from the Wall Street Journal. Many Americans are upset that gasoline prices are rising so fast and that food prices are also going up. Can you talk about whether there's anything that the Fed can or should do about that? And can you also elaborate on the increase that we've seen in the inflation forecast that the Fed put out today?
Sure. Thanks, John. So first of all, gasoline prices obviously have risen quite significantly. And we, of course, are watching that carefully, that higher gas prices are absolutely creating a great deal of financial hardship for a lot of people. Gas, of course, is a necessity. People need to drive to get to work. So it's obviously a very bad development to see gas prices rise so much. Higher gas prices, higher oil prices also make economic developments less favorable. On the one hand, obviously, the higher gas prices add to inflation. On the other hand, by draining purchasing power from households, higher gas prices are also bad for the recovery. They cause growth to decline as well. So it's a double whammy coming from higher gasoline prices. Now, our interpretation of the increase in gas prices is the economist's basic mantra of supply and demand. On the one hand,
we've just heard about the dollar policy, and we've heard about the oil thing here. And what they're not doing is they're not raising these Fed fund rates overnight substantially enough. And we're going to continue to go higher and drain the American household. He said it himself. He said it himself. So what is the responsibility of the Federal Reserve Chairman, who is voted in or appointed by the President in that? And so there are things that have to happen. And what has to happen is, even though that the economy is growing at a lower rate, as they say, and they keep propping asset values up that create bubbles by doing certain things, is the probability of draining the American household. He said it himself. What I'm going to do is start another videotape. The dollar, it's in the best interest to have a strong dollar. Well, it sure doesn't look like they make the right kind of monetary policies to get that going. So we're going to talk about all of this stuff. There's a double-sorted type of things going in there. There's a setup for both scenarios, but nothing. Look, it's not a good enough answer, and because it's not a good enough answer, you have to remove the risk in the system. And in order to do that, you've got to fight, and he said it himself, the draining the household, consumer household. Well, what you have to do is keep powering that, because if you don't, he said it himself, it won't look favorable for the economy. Now, one of the things that we have discovered through our tenure, look, he's a human being, so it's not that anyone needs to hate or anything like that about what people are hearing the truth, because something doesn't add up. I'm going to stop this tape, then I'm going to start a new one, and another one is being asked, we don't think gas prices will continue to rise at a recent pace. Well, then I'd like to know how you're going to fight it off. Tape number 2 will be coming up.